Hello, I'm Ben. Welcome to the channel. So today we're going to talk about finance and accounting and how you as an entrepreneur or business owner should be putting processes in place that make you a little bit more competitive there and maybe give you a better way of managing your future processes through sales and activity, as well as document your performance from prior sales and activity. So in finance, big organizations spend a lot on accountants and legal attorneys around compliance and things of that nature, but entrepreneurs specifically and small business owners, typically what they do is they hire a CPA and they hire an attorney, and they try to do a lot of this through software systems that allow you to drive that yourself. So Intuit, TurboTax, those companies and organizations have different softwares that manage a lot of this for you. Recently, H&R Block and those companies have other softwares too that assist in some of that. And I'm mentioning those companies and specifically around taxes because a lot of time when it comes to finance, people focus primarily on taxes and what they're going to owe. What they don't focus on necessarily is the bigger piece, which is actually going to be what sustains and supports your business, which is financial planning and analysis. So to be able to analyze what you do month to month, there has to be data. And as a consultant, when I go into a company that typically feels like things are out of control and they don't know how to put it back on the tracks, they have no clue on how to get this better. They've been doing this for this period of time and things are just the same and not getting any better. The reason that's the case is typically they're playing it off the cuff, or they're living by what comes every day is what they handle that day, and they're so caught in what's urgent. And we've talked about this in other videos. There's a book called First Things First, which we talked about here on the video several times, which I think is a book that everybody who is self-employed should read. And frankly, I think everybody that's interested in educating themselves at all should read that book, because we live in a world where urgency takes the paramount role above what is important day to day. So let's talk about small business and talk about the usability of some of these items and the difference between accounting and financial planning and analysis and how you actually need both. It's not going to be a long video, but this is a subject that most people should look into. If you're self-employed, you have to pay attention to these things. They're not going to take care of themselves. So a couple of things I would suggest out of the gate if you're self-employed. One, have a daily sales register, right? If you sell stuff that you have, and if it's online, then most online softwares that allow you to do things also have that built within. I'm not talking about anything elaborate or overly elegant. I'm talking about simply taking a Microsoft Excel file. And just so you know, I have corrected multi-million dollar, 20, 40 plus million dollar P&Ls by using a Microsoft Excel spreadsheet to document the information within, separate it out, correct things, make sure they're going into the right columns, and then build a P&L, a daily, weekly, monthly P&L for that business, for that company, that's based on what is found in that spreadsheet. So number one, you have to take a true snapshot of what you're doing. So in accounting, most of that is working past tense. So most people at the end of the year are looking back at their financial performance based on the income earned and the taxes they paid, and then they may look at the cost month to month, but typically people are just concerned with, am I going to make my bills this month? So if you're self-employed, that can be a deadly dance, because if something happens where you are injured, someone rear ends you, or you get sick for a long period of time or elongated period of time, you may not be able to earn every week the same. So it's important that you understand how you plan and how you analyze the data that you currently have. So when those times arise, your business is still going to perform to the level where it takes care of you. Okay? And there's an opposite side of that too, as a professional. So if you're an attorney or you're a physician or you're a clinician of some type, you are your income. So if you get sick for an elongated period of time, or you get injured for an extreme period of time, and you have your own office, no partners, etc., this is when a lot of physicians, dentists, and clinicians run into a severe issue, because they think they're saving money by not hiring an office manager, by not hiring a business manager. Here's the thing in that, and I'll speak briefly to this, but this is a client I recently helped. If you don't hire someone to run your business, then you don't have time to take care of your patients. So it's that micromanaging piece, or that multitasking piece that people wear like a badge. Multitasking is bad. You need to take one task at a time, pay attention to that, get it done appropriately and correctly, and then move on to the next. A lot of people tell you, no, I can juggle all these things at one time. No, you can't, not well. And even if you do well for a short period of time like that, ultimately it will be the law of diminishing returns that slaps you right in the face. The quality of the work you're doing is going to diminish over time. You're not going to be able to sustain things like that. So you have to pay attention to what you're doing. Doing it right the first time prevents rework, which we've talked about in other videos. Rework is waste. Anytime you're reworking on something that you did before, you're wasting time. And it might not be that current time. It might be the time that you put into it before. And I'll tell you, most companies that struggle, rework is just a standard operating procedure. Every single day, from how they document their files to how they do the work on their products and finished goods, is rework, rework, rework. They do not understand that every time you touch that process or you touch that form or you touch that product, again, you're adding cost to it. Cost of payroll, cost of tax, cost of rent, etc. All those things daily that are broken down to the cost of doing business. Every time you rework something, you're burning money. So I say all this to get to this point. There has to be some type of historical data that you are saving. So daily sales action is one. What are we doing in daily sales? What are we doing in weekly sales? What are we doing in monthly sales? If you do that every day for a year, you have some strong data. If you do that every day for 3 years, now not only do you have strong data, now you have seasonality information that can tell you when your business is doing well based on the seasonality of the business and what hard times you should be expecting. This can tell you how to buy your inventory and how to spend your money, because if you have seasonality that works in extreme peaks and valleys, you know to stock and prepare for those lean times and the times that are healthy. What a lot of people do in entrepreneurship, and there's a book called E-Myth Revisited, and I talk about this book all the time. Here it is right here, E-Myth Revisited. A lot of times what people will do is they will struggle, and then they'll have a big month or two in their business, and now it's a new watch, it's a new car, it's buy all this crap, but they don't understand the seasonality of the business yet. So they don't know that might be that 2-month peak before a 4-month valley. So that's why it's important to have this data. One, you have to store the daily and historical data so you then can later assess that data. So that's part of the financial planning and assessment. That's the A, which is assess the data. But you have to have it to be able to do that. So let's talk about financial planning and accounting versus or financial planning and assessment versus accounting. And let's talk about the comparison between the two and how they tie together. And I'm going to try to keep this video under 20 minutes if we can, but we may be up against it because I'm already at 8 minutes. So let's get into it. So accounting is historical data. FP&A, which is what we're going to call financial planning and analysis for the remainder of this video, is future-oriented. So you take both the historical data to plan for your future is the way you should be doing that. Here's the other thing. When you build a P&L, most of it, if you don't have an existing P&L you're coming from, then most of it is going to be prospectus. It's going to be stuff that you're projecting based on how the business operates. So if you haven't taken data and you don't know what that's like, you could then use bank statements to try to come up with that data. Your baseline for your revenue can come off of a bank statement. You can say, well, look, we deposited this much this month last year. You can go back as many years as you've had the bank account, and you can come up with revenue and expenditure data from your bank statement. So that's number one. There is data out there being collected that you may not know of because of how you're spending and how you're purchasing rather, and then also on your deposit history. So those two things can start a revenue line and an expenditure line for a P&L if you don't have anything else and you have to build specifically from bank statements. So when I go in to assess a business, typically I ask to look at their P&L and I ask to look at 2 years bank statements and I ask to look at other financial items like that to try to gain an idea of historical data and try to gain an idea of, does this P&L actually match what the business says it should do based on the bank accounts? And then also, you learn very quickly from business owners, if they don't give you the bank statements, it's telling you that there's a red flag there possibly. You know, if they're not going to give you those bank statements and not give you that visibility, and as a consultant, you'll get that. There's forms you have to sign, the non-disclosure agreements and things of that nature where you're not going to tell their information to anyone else. But they're asking for your help, so to be able to do that, you have to look at the data that's available and then give your assessment of that through your analysis. So The past financial transactions and events are what we're talking about from the bank statements and from any documentation that they've kept through metrics. Metrics, sometimes smaller companies, they don't, metrics is a big scary word that big business use. Not at all. Metrics just means what's your power bill every month? That's a historical expenditure that you have every month. So if you have your power bill, your water bill, your rent, and you have all that, now you have the metrics needed to come up with your operational expenses for the month. That's all a metric is. It's taking historical data, setting a line by that, and going from there. So you have expenditure metrics, you have production metrics, you have quality metrics, you have all these different metrics. For any word you come up with, there's a metric around it, okay? So you have to have that past financial transactions to come up with the next piece, which is what we just talked about, which is forecasting and future financial performance analysis. Future financial performance analysis. What that is you're guessing how the business is going to do next year based on what you know about last year and the year prior. Now, if your business is poised for record growth, which does happen sometimes, you have to be able to support that too through your expectation. Here's the point. A business may struggle, and we talked about a clinician earlier that did not have an office manager, etc. When a clinician hires an office manager, now they have the time to see more patients because they don't have to manage the business as well as manage the customer care or the patient care. So by hiring that office manager, this clinician may have then increased their productivity exponentially. So just like that, a business, a plant, a restaurant could possibly increase their productivity and have a record year or a record month or a record decade because of the team that they hire and they build. So that's why when they say when you're building a team, it's the most expensive thing that your business is probably going to spend money on, unless you're in a leveraged business that's extremely leveraged on inventory. There are many businesses out there like that, but the majority of businesses, their payroll is the biggest bill they're going to pay each month. And sometimes people will be trigger shy on hiring another person when that person could possibly be the one that takes their sales into the stratosphere or takes their customer service to the next level or manages their office so it frees up more of their time so they can spend on patient or client care. So you have to think about those type things, and when you're doing your forecasting and your future financial performance analysis, you need to take into consideration who you have on staff now, what your needs are around your goals, and who you need to have on staff to get there. Okay, so that's a part of forecasting. We'll get into that more in other videos, and we have gotten into that more in other videos. So you just kind of have to go through the library and select and choose, but that's a part of this. We're just going to, just be a slight overview in this video and not get so deep into it. The next point is the purpose of accounting is compliance with regulatory standards and providing accurate financial information. And that's not, if you're in a business that has to report to certain state agencies, you want that to be accurate. If you have, then you have taxes, you have the IRS and everything that you have to pay the government. You have to be correct in that. Then you have payroll. You have expectation around payroll and then taxes and payroll and what you should be withholding for that. And then you have insurance programs and other subsidiaries that come out of that too. So that's what this is talking about. It's compliance with regulatory standards, and that may cover all of those options and more. And depending on the size of your business, the more things, the larger the business has, over 50 employees, over 100 employees, etc., there's less stuff that you have selectivity about. You're at that point, you have to operate and have to run your business and rule your business by those operational standards in a modern country, in the Western world specifically is what I'm talking about here. So that's the purpose of accounting, compliance with regulatory standards, providing accurate financial information. The strategic side of that, or FP&A side of that, is the purpose is strategic decision making, supporting business planning and growth. So that's the thought process, is every business should have a plan for growth year over year, and based on the volatility of the markets, that increased rate should come from financial performance. So typically when I look at a business that's showing me growth and showing me growth year over year, I typically try to project the next year being 7 to 10% better. Now, of course, there's a ton of outside things that can impact that. It could be, depression. It could be recession. It could be inflation. There's tons of things, especially with things that the government screws with, that can jack up the performance of the business. However, if you control your costs, and especially your waste stream, if you're running in a lean manner, 5S, 6S, you're doing these things, you're going to constantly get better. So the expectation is your expenses should decrease. So in that analysis, in that decision making, the SP or FP&A, you should be thinking of improvements based on this. And I know a bunch of numbers rolling around your head right now and all those things, but here's the point. if you document your bills and you have your expenses documented on a spreadsheet and you have your revenue at the top of that spreadsheet and you subtract those expenses from that revenue at the bottom, you're going to have a net number, which is your income for that period. And that is your profitable income. So if you have revenue and you subtract all your expenses plus payroll, if there's a number left there and it's positive, that is profit, okay? So that profit number, you should be expecting that to grow based on your efforts. If there's not a line of growth in that, then maybe you don't have a viable business. That's why that ebook, that E-Myth Revisited, is a very important book for someone who is interested in being an entrepreneur to take a look at. Because there, it gives you case studies, and that's the best thing I could recommend to everybody. YouTube is great, okay, but don't believe everything you hear on YouTube. Meaning, everything is not going to go the way that is planned on YouTube. A hope and a dream is not going to be a viable business in a lot of situations. Okay, you have to have the performance metrics, and you have to have the performance standards, and you have to have the expectation and the effort to move it in the right direction appropriately. So that would be what I give you here around the purpose of accounting and FP&A. So now let's talk about financial standards. Accounting prepares financial statements such as income statements, balance sheets, and cash flow statements. That's true. And you're looking at historical documents to build that, right? So that's something that you're doing currently or in the past. You're looking at yesterday's performance, last week, last month, last year, the last decade, etc. And that's what tells you all those things about how you're going to perform. It's going to tell you about seasonality. It's going to tell you about profitability and the gap between expenditure and revenue, which is your profits. What FP&A is going to do, it's going to be a customized analysis tailored to your specific business needs. So tailored to those metrics that we talked about before. So you analyze the data to come up with a proposal or a projection for next year's performance based on what you know you're going to do. So there is strategy in that. There is strategic planning in that. There is thought processes around how you can improve the business from a lean standpoint or how you can change your process as a deliverable standpoint. A lot of times there's customers of mine and companies that can change how they package their product. One of the funniest things I've ever seen is I went to Whole Foods one time, okay, and I'll name them because it's embarrassing. I went to Whole Foods one time because I heard how they were green and everything was great, yada, yada, yada. And I go in their fruit and vegetable section and everything there is packaged in plastic. And they had taken oranges out of the peel and taken the slices of oranges and put it in a plastic cup that is sealed. And I was sitting here thinking, if only that thing was packaged in something that wouldn't require such, like its initial skin is an orange. That's the point. Sometimes we add an expense to things that's not necessary. So in that situation, not only is it ridiculous and counterintuitive to what they say they are, you're taking something that was already perfect, jacking with it, and then packaging and selling, which is adding cost to you as a vendor and to your customer as the procurer of that or the end user of that product. So that's the kind of stuff you have to think about. It's a ridiculous example, but I use it as examples because it paints the picture clearly. Sometimes you don't have to do things the way that you would do them, and it may be better for the business. And I think about creative types. There are a lot of gifted people in the world that can see things that you can't see or I can't see or that you don't know or I don't know because that's just the way their brain works, okay? But those same creative people might not be able to run a business in a streamlined manner. Those same creative people might not be able to see things that you see when you're looking at something, right? Just like every point of view is different, every point of view brings value. That's why the importance of the team will always be greater than what other things are suggested in organizations. Because if you hire the right people for the right reasons and you get out of their way, you're really going to build a strong team, support them where you can, remove obstacles. And what's going to happen is the business is going to flourish because you've got these sets of skills that are different from everyone else. So now as a team, collaboratively, you're much smarter and much more powerful. You can move things in the right direction at a much more rapid pace. So that's why team is so important. Getting off the subject here, but we'll get back to it and try to get this video wrapped. So the next thing is around financial statements. We talked about a little bit around that, with the cash sheets and cash flow statements. We talked about that. That's your P&L for the most part. And most of these things can drive and go into that. We spoke about metrics a little bit. Accounting metrics relies on standardized quantitative metrics and key performance indicators, which is KPIs. KPIs is just metrics. They're key to your business. They may change business to business, and they may change over time. So your KPIs that tell you how your business is performing, that's what you want to pay attention to. That's what you want to monitor daily, weekly, monthly, etc. See how you're performing to that. In FP&A, those metrics provide strategic insights and recommendations based on the data analysis you had before on what you should do now to make next month better. It's like that quote that we got from old Matt from Demolition Ranch. Do something today that makes you better tomorrow than you were yesterday. That's exactly what this is. You're just taking what's going on today and trying to make tomorrow a better day than it was yesterday. That's all you're doing. And the final piece is collaboration. In accounting, you can collaborate. Basically, you're primarily interacting with other accountants and finance practitioners or other business owners, etc., to try to find best practices. I mention best practices all the time. Best practices is this. It's something that somebody does very well, and so you're mocking their process to get the benefit that they're getting from it, right? So it's just like if you go through weapons and armor. As we went from black powder to white powder, everybody did it. Why? Because if you shot at a guy with black powder and he knew exactly where you were standing. When you shot with white powder, there wasn't that cloud, or smokeless is what they call it. There wasn't a cloud anymore, so you didn't have to shoot and move. In the black powder world, unless you were standing frigid like the English and the French did, where they just shot across fields at each other standing in a line, which is stupid, you then had to shoot and move because of the cloud. Same type thing. You want to improve, and as other people improve, if you can learn from that suggestion that they did, then you can improve in the same way at the same speed, but you don't have to learn from the mistakes. By doing them yourself, you learn from the mistakes that they made. So that's wisdom. The speed of improvement is faster because you're learning from other people's mistakes. You're putting in the best practices, which are proven there, and then it should be sustained. Large organizations sometimes have a very hard time communicating best practices across the entire organization. So you may have 50 different locations, and they all do things 50 different ways, and you're losing a ton of time, a ton of money. You have a bunch of risk that could be mitigated if you went and investigated your best practices and then replicated them across each location and made them mandatory. By doing that, things are safer, it's cheaper, it's kinder on your team, your equipment, etc. And it's lower cost to your customers because you're cutting out all that waste. You're doing it right each time, the proper way, and replicating that across all locations. That's what franchising is. If you look at the McDonald's history, if you look at the founders video, Ray Kroc and those cats, check that out. That's exactly what we're talking about here. So collaboration in FP&A looks like you collaborate with various departments like sales, marketing, and operations. Basically, in that financial planning and analysis, you can only do as good a job as the data that you get, okay? So that's why I say look for two different options around the data. If you look at the P&L and you can't justify things, then also get the bank statements. If they won't share the bank statements, if you're a consultant, do something else, go somewhere else. If there's dishonesty in the reporting, or if there's theft. So a lot of times looking at the bank statements, you can see there's a bunch of cash missing. Well, where's the cash deposit? Where's it going? Where's it going? If it's not going into the business, so you're living off the business from a personal standpoint. Okay, do you also take a salary? Well, no, I can't afford to take a salary. Well, you took out 80 grand last year. We can pay you a $60,000 salary, and the business actually can survive off of that. So take a salary and don't keep ripping cash out of the account. So there's tons of different ways to look at that. You can find things like that from doing the analysis of this data. And data can start with a spreadsheet and bank statements, okay? So don't let this be daunting. Don't let this be something that seems like it's too big for you to jump into. You can handle the accounting side of this and the FP&A. You can do it from a small space and then grow. And then when you get to a point that you need help with it, call a business analyst, call a business consultant like myself to get that additional help. It's like this. It may be expensive to hire a consultant, but that's just like it may be expensive to go to a dentist. Okay, if you go to a dentist and they find the cavities, they can fix your teeth. If you don't go to a dentist and they find your cavities and you have to get all your teeth pulled because they hurt, or if all your teeth fall out because you didn't take care of them, it's much more expensive after that to try to fix the problem. That's exactly how a consultant works. The idea is to find the cavities, all the rotten spaces, and try to fix those before they become too much of a problem that can't be fixed. Okay, so that's why business consultants, in my mind, are where most businesses should turn. And as entrepreneurs, if you reach out to a person like myself that's a business consultant, the first conversation typically is free. And you can figure out some of the things you're looking at there. So just some thoughts. You're not necessarily in it on your own, but don't think that not hiring is going to save you money, because it may not. And if you don't know how to do this, and I say this specifically for clinicians, dietitians, physicians, dentists, psychologists, doctors, chiropractors, anybody that operates in a small office, one or two physicians, small staff, under 10 people, etc., you need to talk to a business analyst or a business consultant, because your quality of life will be deeply impacted if you take that time. It's worth the financial investment, just because when I talk about clients that have suffered, those are the clients that I see that suffer the most. And if you look at the suicidal tendencies for doctors and dentists and folks, psychologists in those professions, it's kind of astounding what you see. Kind of gone off on a tangent there, but let's keep this around FP&A and accounting. Hopefully this video is a vehicle that will help you understand these things better. I say vehicle because anything that makes you move in the right direction and is used for that could be very useful. Hopefully this is that for you. It's a subject that I enjoy talking about because typically it's where people have the greatest gaps. If subject matter like this is interesting to you, please like and subscribe. Please subscribe. We're trying to grow the channel, and happy to have you return for future videos. I'm Ben. Be good.